Hello, Katie. Katie Stockton is with us now. I just made you a panelist. Welcome back, Katie.
It's good to be back.
Oh, there you are, Katie.
Yep, good. I just found the mute
Okay.
button.
All right, beautiful. So nice to have you back. How have things been going? We've had a little bit of interest rate pressures in the market. If you want to
hmm
share your screen, it's at green box.
Yes, let me do that.
Okay.
So yeah, certainly. I mean, it's been really a crazy few weeks for the markets on so many levels, and
Yeah.
it feels like it's never going to let us rest here. And I heard your commentary from earlier, and it seems like we may be, on the same page to some degree. Can you see the screen here?
Yeah, we have all your charts up here, and we're looking at the S&P daily with looks
Okay,
like cloud support
that's
underneath
right.
it. Okay,
That's right.
so tell us what you're seeing, Katie.
Well, yeah, we can start here. You can see, obviously, the intermediate term uptrend has extended itself pretty dramatically this month, and we've seen some consolidation develop in the last few days or so, and that's been pronounced this morning in the S&P futures. And with that, we've gotten downturns in our short-term gauges, and that includes this here, which is the daily stochastic oscillator, coming
Okay.
down from 80%. And notice that's happened a lot, right? So that in and of itself isn't too big of a deal. Then it's combined, however, with a MACD sell signal. This is the MACD indicator, standard parameters here, short-term trend following gauge. When you get this crossover, you have a loss of short-term momentum that's somewhat meaningful. The design of these indicators is to eliminate noise. So it's said, okay, stay with the market over the past couple of weeks, just until the last day or so. So
And
I
then what
think
do you do, Katie? You're a registered investment advisor, correct?
that's right. And I publish research. I don't
Okay.
manage money, but I do publish research that's all technical in nature. And I think when you see the S&P 500 dip below this 3871 level that's highlighted on the chart, this is a minor former resistance level from
Right.
January. That would
Yeah.
be a bit of a stop loss from a short-term perspective in my world. I think it's where we want to increase hedges or decrease exposure on the long side to U.S. equities. Because when you think about the next support levels, I think we would be hopeful to think that this 50-day moving average in green is going to act as support again. It's about 3% below current levels.
3,800. Yeah.
Yeah, just below. I think that would be
Okay.
somewhat hopeful based on where we have our indicators. The cloud and also this former support or former resistance here,
Yeah.
3588, those would
Yeah.
be a more natural place for a pullback to discover support and finally mature. What my thinking is that we're actually going to get into somewhat of a frustrating sort of trading range environment potentially for a couple, maybe 3 months. And I say that not because of what you're seeing here on the daily bar chart, but when you look at the monthly bar charts, of course, I have Bitcoin pulled up here on my Bloomberg terminal, and for a good reason, right? So we can talk
Yeah.
about
You always
that
have to
as well.
watch the star of the show. Yeah.
I know, and I too am watching it as a bit of a risk metric. But here's the monthly bar chart of the S&P 500 with the DeMark indicators. If you can see these numbers floating above the price bars, the DeMark indicators now have what we call sort of a 9 sell signal. So it's where you see this 9 and red arrow, and you tend to see a few bars of consolidation on the back of that. Now, being a monthly chart, that means a few months of consolidation, and wouldn't that be healthy and a welcome development from a long-term perspective? Long-term momentum still very much positive, and we don't expect that to change. But certainly we need some relief from these overbought conditions based on both those DeMark indicators and things like the stochastic oscillator. We have not yet seen any deterioration in our intermediate term gauges. So far, we've just seen short-term deterioration. But my thought is that with the potential for this trading range or consolidation phase to unfold, that we'll see a loss of intermediate term momentum with that. And because of that, I would be managing risk here. And yet there's also ways to take advantage of that on the upside too.
Didn't DeMark have an exhaustion sell about a week ago on a Friday?
I believe
On the
so.
daily, I
Yeah.
think on the daily, Katie.
Yeah, so I think they were looking for a propulsion level up to about 3907. The
Okay.
high here, of course, was 3950, so that was
Yeah.
exceeded. I'm
Yeah.
not sure exactly what Tom was looking at, but suffice it to say that there are signs of upside exhaustion per his indicators. I use only two of his most popular gauges, TD Combo and TD
Right.
Sequential, so there are certainly more sophisticated users out there of his work, but it does enhance what we're seeing in these stochastics and supports at least 2 weeks of corrective price action here. Uh,
Today I've reached a point of exhaustion. I get up at 4 in the morning.
I feel you,
And-
Dale.
all right, thanks, Katie. So, all
Yeah.
right, got a little bit. So the view is we could be in for just some consolidation. Would
Mhm.
you say worst case would be the bottom of the cloud and some of those moving averages around
Yeah.
3,400?
I think, right. I mean, this is the 200-day moving average,
Yeah.
34.24. I don't think we assume it's going to be of that magnitude because
Okay.
we don't have the loss of intermediate term momentum that would suggest it's a correction, not just a pullback.
Okay.
It may just be a matter of time. I tend to look at the indicators more than I look at the levels. The levels are great for guidelines, but it's really a setup in the indicators on my end that would suggest, okay, here we have a buying opportunity. And that's when we see a lot of this, so where we have a lot of securities flashing these oversold upturns. Last time that occurred was very late October, early November. So it doesn't happen that often in a bull market. So we'd pay attention if we get that kind of oversold upturn, of course, on a short-term basis. And then also we tend to watch the market internal measures. So we have a
Okay.
morning note, and that those market internals tend to flash these oversold extremes. It doesn't have to be a buying climax, but usually you'll see sentiment get overly bearish, and certainly that's not the case now.
That's interesting. A statement that most people would not make, that you're pretty much saying that your indicators are more important, even though they're developed by price, but they're more important than just looking at a price chart. Is that what you're saying here?
Right, so they're derivations of price.
Right. Okay.
But to me, what they do is they give us sort of a black and white result, right? They
Yeah.
eliminate some of the gray area of focusing on levels. If you think about any support or resistance levels, and really they're such a gift from the charts because they do help us discern risk and reward. But there's just too many market participants to allow for these levels to be precise, right? So
Yeah.
a support level, think of it always as a cushion. And that's why we really lean on those indicators to say, okay, well, we've finally discovered support and now are ready to move higher, because that support discovery can take some time. If you look just as a case in point back in September, right, we saw an oversold reading registered on the 9th and it came right into its 50-day. Was that
Oh,
enough? It wasn't
conflict.
enough. So
Yeah.
we like to watch that MACD to turn and give us a little bit more confidence that a turning point is behind us, right? So we're not trying to top tick or bottom tick, but rather capture the bulk of these moves. And that goes for the long-term charts as well. That monthly MACD that you saw, what a great tool for really avoiding the major downdrafts. And as much as these indicators are largely lagging in nature, they get you out just in time to really miss the ultimate downdrafts, right? So if you want to stay the course, be long-term and focus, I think that's okay here if you can live through these sorts of sort of short-term volatility events, if you want to call it that. But if you look at this monthly MACD back to, let's say, 2008, it gave a sell signal in November '07. So would have had you out for
Yeah.
most of that time, right?
Yeah.
And then before that, if you go back to 2000, we had sell signals start to develop in early 2000, which again was enough to get you out and got you back in mid 2003. So something as simple as a long-term trend following device like that, I think can be great to have on your side.
Okay. Very nice analysis. Were
Thank you.
there any other instruments you wanted to cover here today?
Yeah, I mean, of course, I think we should address Bitcoin. I'm somewhat reluctant, but I do think it's really informing market sentiment. And my message to my subscribers has been, the day that you come in and Bitcoin's down 10 plus% on the day, which of course none of us can rule out. That's when you've probably got a crack in that sort of risk asset chase. Now, certainly Bitcoin, regarding the DeMark indicators, does have sell signals. I'll show you what that looks like. You see this 13 and this red arrow. It has happened in the past without implications, but the difference this time is it looks like we're about to get that overbought downturn. So, wouldn't it be healthy to see this pullback to even perhaps the 50-day moving average? Unfortunately, that's 25% below.
Yeah.
But that would be healthy in the big scheme of things. The
Yes.
good news on Bitcoin for those who are trafficking in it is that these are really only short-term signs of exhaustion. So I think as it pertains to the broader market, that we can assume for now that it's a short-term pullback that it's in store for. You see it in the VIX this morning up about 9%. So I think we're getting going here in terms of that volatility event.
Okay, nice look. So just pull back because long-term momentum is good. A lot of people are talking 6 figures or higher. And, some of the real good people were talking about it when it was, well under 10. So,
That's right.
okay, so Bitcoin is really the, I guess you have to call it the best roulette table in the casino. Anything else on your radar you want to talk to us about?
Well, we should address the treasury yields, right? Because that,
Okay.
certainly they've been positively correlated to the equity market as is normal recently.
Yeah.
So we can expect that with the S&P 500 and major indices in the U.S. poised to pull back, that we can probably expect the same from treasury yields. But I'd want to make sure to highlight this as a major shift. So if you look at the monthly, here's a MACD crossover that supports this long-term turnaround that I believe we've seen. It was the breakout on the weekly chart. You can see above this 1% level.
Right.
That was a completion of a big basing phase. And then you have this cloud having been exceeded, just another resistance level. So all of that favors this uptrend, albeit likely to become a bit more gradual as, you see those overbought conditions to some degree take their toll. So you could see 10-year treasury yields perhaps coming back into the cloud-based support now. That's 1.14%. And with that, you can imagine that the defensive sectors of the market are likely to actually
rally, like
yes.
utilities.
Well, at least, utilities actually do look poised for an oversold bounce in absolute and relative terms, but to outperform. So, of course, outperformance in a weak tape doesn't necessarily mean it's profitable in absolute terms. But if you look, this is an RRG. Are you familiar with this, Dale?
No, I'm not.
It's a really neat sort of way to look at sector rotation and other rotations on a normalized basis. It was developed by Julius de Kempenaar out of the Netherlands, and they've licensed it to Bloomberg here. And it's a relative strength reading and then the momentum of that reading. And if we were to animate this, you'd see a clockwise rotation around the middle, which is representing, in this case, the S&P 500. So notice energy, financials, industrials, staples, materials, they're all pointing up and to the right. That means they've outperformed over the past few days. This is just a 5-day view. But now if you animate this and you see this clockwise rotation, look at what's going to sort of bring up the rear here. It's healthcare, utilities, REITs are coming around, staples still with a decent trajectory. So I think that, it would be natural to see some of these defensive sectors, which are also showing some signs of downside exhaustion from a short-term perspective per the DeMark indicators, start to perk up a little bit and outperform and be perhaps a safe haven along with gold prices, which are now bouncing off support. So there are ways to position through this kind of volatility.
Is this chart only available on Bloomberg?
No, I believe Julius has a website, and forgive me, I don't have it on hand, but he does. If you just Google it, I'm sure you can find it. Just Google RRG. And I think it's offered also via Optuma, which is another great software platform for charting.
Okay. One of our attendees just posted it, so
thank
wonderful. You very much.
Thank you.
I've never seen it before. It is a great way to see. It's kind of like a relative strength meter for you. You
That's
want to buy
right. And
the strength. Go
You
ahead.
can really see the cyclicality. Well, maybe that's not the best example, but you can even see it on the group level. It's really pretty fascinating. You can break down, say, the semiconductor sector, and you'll see the rotations within the sectors. For those, those are the listeners who are market neutral or sector focused. I think it could be a fantastic tool to see where things are, out of line with their positioning, that type of thing.
Katie, your analysis is elite, and your demeanor and the way you explain it and your tone is, builds confidence. Just listening to you about what you say, and really glad that we had you back. I'm sure I'm not the only one, but for people that are interested in your work, what's the best way for them to follow you and
Yeah.
subscribe? You could show your website if you'd
That's a
like.
good idea. Yeah. So, well, thank you first for the compliment. That was very nice of you, and for giving me
I'm
the
not,
opportunity here.
yeah, it's not patronizing. I mean,
No, I
you know,
appreciate that.
and it took, and you know what? It didn't take long for you to get like the major points across. So it's really crisp too.
Well,
So
yeah, and that's
there
what
you
we
go.
try to pride ourselves on. So it's fairleadstrategies.com. You can sign up for a free trial of our research. We have plans that range from our sort of basic plan, which is less than $2,000 a year, up to premium plan services, which are more consulting in nature. And we actually sort of become an extension of trading desks and service a lot of institutional clients that way, where we're doing project work and giving them constant feedback from a bottom up perspective. We produce 3 research reports per week, one of which is sector focused, another is more top down oriented, but always with biases on the US equity market, crude oil, gold, the dollar, treasury yields, and sector relative strength work. And then we have a daily report that is a nice, like, cursory overview for those of you who are trading actively. And it looks something, I can show you this morning. So it looks something like this, where it's just a quick one pager, S&P futures at, on the 60-minute chart, quick bullets. We talked about Bitcoin this morning just because of its relevance. We highlight some DeMark signals. We highlight some market internal measures. So hopefully that intrigues some folks. We also are on Twitter, albeit not super prolific there, at Stockton Katie, and you can find us on LinkedIn as well.
Katie, thank you for your giving spirit and sharing your views with us today, my trading warrior sister. I appreciate it. And
Of course, Dale.
yeah, maybe we'll have you, not maybe, let's have you back, say around the May timeframe, and
Perfect.
see what things are happening. I'll hit you up on Twitter. Everyone, Katie Stockton, giving you some concise, clear, actionable ideas and at least some good warnings. If you're flying blind, I don't think you are after this interview. So thanks again, Katie.
Thank you.
All right, everyone. So that's a wrap. See everyone for Turnaround Tuesday. Good hunting the rest of the day. You could join Blake and the team for the bias chart in about half an hour. See everyone later. Remember, don't just count your pips, count your blessings. And we'll see everyone for Turnaround Tuesday. Adios. And thanks again, Katie.
Of course.